everyone. Really happy to be here, and warm thanks to the organizers for inviting me to this wonderful event. Today, I'm going to talk to you about accounting and its role in sustainability. There is a long title over there on the slide, Putting Accounting into Perspective, Translating Grand Challenges into Corporate Accounting Practice. Well, my message during this presentation is that accounting has been developed greatly in the past few decades, and it has incorporated some of the sustainability challenges that we are facing. But it needs still a lot of development, and it needs to go into the direction in which it would help decision makers to tackle what I'm going to talk about, grand challenges. Well, before I'm getting to the grand challenges, I will speak briefly about how the intersection between accounting and sustainability has been evolving over time. I will claim that accounting has been adapting quite much to the sustainability challenges of contemporary societies, but the outcomes of these efforts are not sufficient yet, and much more needs to be done. We need more forms, new forms of accounting. And I'm going to touch upon these new forms of accounting by the end of my presentation. But let's start with the beginning. When we think about accounting, we think about financial statements, we think about cost accounting, we think about budgets or appraisal of capital investments. We hardly associate these forms of accounting with, for instance, the beautiful landscape that you see on the slide. Both pictures are taken from Finland. Or then we hardly think about this other species with which we are sharing this planet. We hardly think about ecosystems or the water circuit in nature. It is true that the natural world has provided business organizations with a lot of resources, such as the ones that you see on the slide. Coal, for instance, or timber, or crops, or many other resources. Well, these kind of resources have made their way into the accounting system. It is true, they are reflected quite often as assets to be used by the organizations. But there are many other types of inputs coming from the natural environment that have been neglected by accounting. I'm speaking, for instance, of the water or the air, ocean water, sea water, or the capacity of ecosystems to regulate our environment. All of these are not reflected in accounting statements. But it's true that, the world is changing, and ever since 1970s, we have become aware that the business organizations have impacts on the natural environment and on the societies. We have pollutions of land, we have pollution of water. There are negative effects in the non-Western world where child labor and forced labor facilitate the production of cheap products that we use here in the West. Or then there is air pollution that is killing many millions of people in the world, around the world. And of course, businesses have reacted to these developments and have taken action to diminish these negative impacts. Of course, accounting has been used for the purposes of helping managers to address these negative impacts. So we can talk about accounting for business impacts. Well, all of these impacts are often called externalities, simply for the fact that the price that needs to be paid for these externalities are manifesting elsewhere than in the place where they've been originating. And quite often it is not necessarily a monetary price. Right, I'm going to move next on, and my idea here is to outline the fact that accounting has been developing to incorporate the sustainability challenges, and we have a lot of new forms of accounting that have been developed over the past several decades. We have new forms of accounting in management accounting. For instance, environmental management accounting is a broad area of accounting which provides a lot of useful tools nowadays for decision making, especially within organizations, to understand their impacts and to manage them better. I will just briefly introduce some of these tools that are available nowadays. For instance, material flow cost accounting, which looks at material flows and stocks of materials, which helps allocating costs on these material flows and to increase the efficiency of production processes and overall to reduce the input of natural resources into the production processes. There is accounting for waste and for recycling, which looks at different types of waste that are produced and what kind of materials are recycled. There is water accounting, which, as the name says, it's focusing on water and its use. Sustainability in capital investment appraisal means that sustainability criteria are included in the process of capital investment appraisal, alongside the more traditional forms of economic and financial criteria. Then, in addition to environmental management accounting, we also have on the social side accounting for employees and accounting for human rights, who are looking at issues of employees' well-being, employee safety, human rights. In reaction to climate change, we have carbon accounting, which is measuring and monitoring the emissions of greenhouse gas emissions in organizations. We have carbon internal pricing, which is an internally designed instrument to assign or helps managers to understand the cost associated with carbon emissions, and then green supply chain performance measurements. This is just to give you a flavor of different kinds of developments that have been occurring in this field. By no means it is a comprehensive understanding of everything that is around in social and environmental management accounting. In addition to that, of course, we have developments occurring in the area of external reporting. Perhaps the oldest form of such reporting are the value-added statements, which provide an understanding of the value added, which goes beyond shareholders. So value added, for instance, to the governments or to the employees. But since 1990s, we have a proliferation of different kinds of forms of reporting and a proliferation of different kinds of frameworks and guidelines to help with external reporting. Global Reporting Initiative, perhaps one of the most popular, and which reflects very well accounting for business impacts. Integrated reporting, United Nations Global Compact, these are more loose type of frameworks, principle-based, that help with reporting in a more flexible way. Importantly, however, is that we have regulation in place in the past few years. For instance, at the European level, the standards that have been developed at the European level and which are mandatory for about 50,000 companies in the EU. Similar standards, or not similar, but some standards developed by the IFRS, the same organization that has developed the financial statement standards. There are more innovative forms of external reporting, so less conventional certifications and labels that testify that some of the business impacts have been mitigated or even eliminated. For instance, that suppliers from the non-Western world are treated correctly, or that animals are treated ethically, or that forests, for instance, are managed adequately. Right, in addition to impacts, we also have dependencies. So dependencies are those impacts of the outside world on the business operations. So it's important that we understand how business organizations are relying on the outside world. There are different kinds of dependencies. Some of them are more obvious and tangible, some are less. Perhaps the most obvious types of dependencies are those which are associated with the food sector. There are a number of inputs into the food systems which are very vulnerable today. For instance, if we talk about the stock of fish, which have been decreasing at alarmingly low rates, or we talk about cocoa and coffee beans, which are really affected by the warming of the climate, or then crops which are affected by weather or are exposed to extreme weather events. And all of these can affect the food supply chain and in the end the business of the food retailer. But there are more subtle dependencies which come with regulatory changes or with the fact that customers have different expectations of business nowadays. So the transition to a low carbon economy, expectations to reduce the biodiversity loss and all of these, they put pressure on businesses, and there are expectations that they will be compliant with these expectations. And that means that there are more costs and there are more investments to be done by companies in order to be compliant with these new regulations and new expectations. The risk of liability is also higher, and it's not uncommon to see quite many companies being sued because of their contributions to climate change, for instance. So risk management, that means that we need accounting tools to be able to facilitate the risk management at the level of business organizations. Right, but now I'm going to move on and claim that it's no longer an issue of impacts, but of grand challenges. There are phenomena which go beyond single organizations, go beyond being able to track the impact of single organization on a specific phenomena. And such grand challenges are, for instance, plastic pollutions in the ocean, which is widespread and on large areas, forest fires, again on extended areas, glaciers that are melting, droughts all over the world, biospecies and biodiversity loss, and poverty all over the world. And I will claim that for that, accounting for impacts is not sufficient anymore. It's not just about externalities and impacts. It is really about addressing these grand challenges in a way that goes beyond individual organizations. So now we have this conundrum that much of the accounting tools that have been developed and much of the reporting which are made by the organizations, they show really impressive developments in terms of sustainability. Companies are reporting important progress, and sustainability reporting as such has been developing greatly. Quite many of the large organizations are reporting nowadays, as the graph on the slide shows. Yet this progress doesn't seem to be reflected in the state of our world at the moment. We have a number of reports coming from authoritative scientific bodies, which shows that we are not going in the right direction. Climate change, we are most likely that we won't meet these targets of climate change. Biodiversity loss continues at the same rate or worse. And poverty, we are not going in the right direction either. So that begs the question of whether accounting for impacts as we know it now is sufficient to equip decision makers to address grand challenges. I will now claim that one way to go in order to address these grand challenges is to engage with the concept of planet boundaries. This is a concept that has been developed it's rooted in science, in scientific research, and which help us understand, it visualizes different areas in which we are going beyond a planetary boundary or certain boundaries that are safe to live within. We are talking about climate change, we are talking about ocean acidification, and many other processes at planetary level. There are 9 of these different boundaries. They've been measured ever since 2019, and at the moment we are in a situation in which 6 of these boundaries have been transgressed already. Now, as accounting is adapting, new forms of accounting are also developing. And very briefly, I will tell about new emerging forms of accounting that take into consideration this heuristic device of planetary boundaries. There are two non-for-profit organizations that have been taking seriously the concept of planetary boundaries. The science-based targets for nature, the Science-Based Targets Initiative and the Science-Based Targets Network. And they've been developing a set of standards in the past few years. They are in a very experimental stage at the moment. Some of these targets are meant for the reduction of carbon emissions, while some other ones are for fresh water on land. And very soon also ocean standards will be released. The idea with these targets is that companies or business organizations are, in reducing their impacts on nature, they are considering certain targets that are based in science rather than doing this reduction in an arbitrary way or based on their own estimations. As I'm running out of time, I will just end briefly by saying that accounting is a very useful tool, and it helps organizations quite much, and it's very important, but in itself it's insufficient. It needs to be coupled with a different governance model, and it needs to be coupled with different business models. I will stop here, and thank you very much for your attention.
Thank you, Oana, for your very valuable insights. I really like that, what you said. And I have one seemingly simple question, maybe a bit provocative, but I think it's important to ask this. Why should companies, businesses, actually care about grand challenges you were emphasizing so nicely?
Thanks, Peter. That is a very important question, very provocative indeed. Well, there are many angles to look at when responding to this question. You can take, for instance, if we are just looking at the urgency of the crisis that we are facing, of course, that we cannot really afford to leave aside any actors that are important in contributing to alleviating any of the problems that we are facing. Companies have important resources that they can use in mobilize and help us to overcome these challenges. But perhaps we should take a look at the starting points of this crisis. Where did it come from? I mean, it's not something that emerged out of nowhere. It's clearly emerging out of our own activities. And of course, business organizations have had an important contribution in creating this crisis in the first place. So of course, it is more difficult to pinpoint exactly which organizations have been contributing, but it is a sort of collective contribution. And now we are aiming to collectively contribute to alleviating this crisis as well. So I think that yes, of course, we can take some other few points into account, such as ethical points or any other, but I think that this would clarify sufficiently for now.
Yeah, that's good. That's clear. Thank you once again, Oana. But we will meet very soon after the two next keynotes, and then we have a joint discussion, and we can elaborate on these issues.
Looking forward.
Yes.